The current state of things in the United States right now, when we talk about hikes and rates and strict lending facilities, which way forward for apartment investing? Which way forward?
So like I think rates right now they're very weird. I think sellers are still wanting very high prices and interest rates are still high. So it's because people are getting record rents, right? So sellers are like, I'm not motivated to sell. So what we're seeing is we're seeing a large drop in transaction volume over the last couple of months, right? And over the last half year.
Yeah.
But I think people that have the right debt in place, where it's a assumable loan, for instance, like the loan can be picked up by a new buyer. Those are properties that are actually transacting still, because it's the debt that's the main obstacle for new buyers and new investors to come in and take over a property, right?
True.
So I'm seeing that right now. It's a very interesting time. There's great deals out there, but generally things are cooling off. And so this is a great opportunity for investors to take a look around, start looking, educating themselves, right? And only being very scrutinizing of the best of the properties out there. And so only the best operators and the biggest operators are continuing to keep their volume moving because they have all those connections. But I just think now is a time to really be a student of the market and watch watch how things unfold. Because if you get yourself into investment now, interest rates are most likely going to drop, and so will exit cap rates, which means that pricing will go up, right? So that's great for business plans. So if you can get yourself into a property now or in the next couple of months or even a year from now, most likely there should be a favorable result, just because rates will be dropping and there's going to be more exit strategies once that happens. That's just my 2 cents, but I'm curious to hear what you think about that.
Well, I think, going forward, the rates will drop. That's what I anticipate. And just like you talked about assumable loans, it's a good time to assume because of the good rates in the past. So coming into a deal as something that you assume also affords you, there's still a bit of meat on the bone, and you can leverage at the back end. When appreciation creeps in, you take the benefit of what the other investor has started with. So practically, that seemingly looks like the best way to approach things right now. At least, one of the good strategies of stepping into a property right now because of the hikes in rates. And pretty much, what I think to myself. And